Hi, this is Randy Finney with Right Side of the Chart, and this is an early session update for Friday, October 16th, 2020. I'm going to keep this one strictly limited to the equity market, so we'll make it a very short video, brief update. Not much to add since yesterday's video or the posts that were on the home page. If you haven't seen those, you might want to catch up. But just to recap, yesterday both QQQ and IWM fell to pretty key support levels, successfully tested and bounced off those levels. They remain in a near-term uptrend since the recent divergent lows. That's down here back in late September, and so the two most significant technical events that occurred yesterday were the pullbacks to support. Again, support levels that were, had a high chance of a bounce, and that's what we've had so far. And then the extreme oversold readings that I covered on the NQ. This is the NASDAQ 100. That's around that 27 level on the RSI. And again, I went over that yesterday. And just to reiterate that pullbacks to that level during downtrends at the very least accounted for 2-3% bounces in the NASDAQ 100 at least, at minimum, whereas in a bull trend they often accounted for upwards of 7% or more, and of course this was the divergent low right there. So there's the initial thrust, and what I'm going to is where you had at least a decent correction. In this case, well, let's do this one. That's where we had a divergent high and then a pullback. So, that put, the near-term outlook is bullish. And then there was this downtrend line I believe I covered in the video yesterday that was also taken out. So now the reason I want to do this video is, okay, where does this bounce? Where does it go to at minimum most likely? Where are the levels to watch right now? All right, I'm starting out here with NQ, so we're just going to go there. I tweaked this line since recent charts, and what I did is the line used to be down here, was a support zone way back here. And so now this is the line I'm looking at, about 120.30 or so. Why did I put it there? It represents a lot of reaction lows right here. There it is. So there's some reaction lows, and it's what I call minor resistance. But the bigger picture is we had this bearish rising wedge. It broke down. We had a snapback rally, and it played out for a correction right there where we reversed. That's the backfill, the gap in QQQ, and that is, again, I say this quite often. This is why I cover these charts of NQ and QQQ. Even though my personal preference is to trade the NQs, I know a lot of traders trade QQQ, and as such, you're not going to see gaps on NQ. NQ, the NASDAQ 100 futures, they trade virtually around the clock. They shut down briefly each day after the trading session closes. Then they open back up, and they trade, almost 24/7. They shut down, on Friday afternoon, but then pick back up Sunday night. And so therefore, you're not going to, you're going to see very few gaps. About the only gaps you're ever going to see are, Sunday when they close down on the weekend and open back up Sunday night. Now, where I'm going with that is, okay, so you don't see gap support right here. You don't even see major support, but you do see solid support on QQQ. So that's where, if you were trading NQ in a vacuum and you're only watching the NQ chart, how would you have known to, cover and reverse right there? But if you were also looking at the QQQ chart, like I showed yesterday in pre-market, we backfilled that gap. That's big support. So that was the catalyst for the bounce. Pullback to support, as well as the extreme oversold condition there. Now, okay, so that was then. This is now. How much have we bounced so far? It's a decent bounce, certainly tradable, almost 2.25%. If you trade the NQs, I don't have to tell you how much money that puts in your pocket per contract. 120.30 is a minor resistance, so that's a level I'm watching there. And we also had back here some reactions along that level. You can see as well as I modified that line right here. Just imagine that's not an arrow tool, just a line tool showing you these reactions, that reaction there. So there it is. That is pretty much a minimum bounce target or a likely reversal point, but that's just one of several things to watch. And we're also going to watch QQQ. So when I look at the QQQ 60-minute chart, here's a downtrend line with 1, 2, 3 reactions there. So that downtrend line comes in right around this support. So 293.40, you can make it out right here, this line. That's at 293.40. Enough reactions to make it a a valid resistance level. I'm showing you all the reactions on that line, that meaning candlestick, shadows or bodies. That's the skinny or fat part. Another reaction there to help validate it. So there it is. That is resistance. I would expect a reaction if we get there. And just above it, you also have that minor downtrend line resistance. Break, solid break above those levels, going to be bullish. Then that brings in the next resistance, would be the recent highs. And then there's really nothing much left between that and, new all-time highs if that happens. So there it is. I'm going to tweak this trend line now. You know what? I'll just add a second. I think I did that in yesterday's video, what I call a BOD, or benefit of the doubt trend line. What do I mean by that? Well, when I have two trend lines and I can draw two trend lines, you want to give the lower of the two, especially during a bullish trend, the benefit of the doubt. Now, I just added that trend line. I think I did that yesterday in yesterday's video because we had a little brief pop, one candle down there that I excluded before. But now that we had the 1, 2, and now multiple reactions there. So now this is by far the more important trend line to watch. In fact, this one's been traded through now, and I might as well just delete that one. It's not even needed right now. So now this is the trend line to watch. So there it is. We're pinching, and to keep it very, very simple, here's a little symmetrical triangle pattern right there, and formed by this trend line. So bullish, bearish. And of course, we need to also take out yesterday's lows, I said, to really open the door to more selling. So as of now, again, I mentioned several bullish developments yesterday, including the pullback to support, the oversold readings, the PPO turning back up at the zero line. You can see the PPO line, which is the blue line, continues to turn back up. It hasn't made a bullish cross yet, but so far we're holding above that zero line. So that's that. Puts a near-term trend. If you took longs yesterday, you can just trail stops up. If you want to just book quick profits and run, that's kind of my preference in this market. Is get kind of hit and run on these these opportunities. Get a couple percentage points, get out. Long term, with the elections coming up, I expect volatility, and I don't think it's going to be conducive to trend trading or longer term swing trading until the dust has settled after the elections. Maybe I'm wrong, but that's what I'm looking at. Okay, next up, IWM, small caps. If you are a SPY trader, ES, let me know and I'll post some charts there, but I'm really just focused on these two right now. They're trading well to the technicals, and you get more bang for your buck. What do I mean by that? Well, the SPY has a lower beta index compared to IWM and QQQ. Because the SPY or S&P 500, it's much more diversified. It holds 500 stocks. Within there's 11 different sectors. Within those 11 sectors, you have high growth sectors like technology, largest component, but yet you also have a lot of defensive sectors, such as utilities and consumer staples, things like that. All right, what do you see here on IWM? Well, pretty clear. You have a potential downtrend line. Yeah, we do. It's validated. 3 reactions so far. That's where we hit yesterday. So 1, 2, 3. And there's our uptrend line off the lows. Also validated, several reactions there. One more there. One more there. And that's it. So same story as QQQ. Upside break bullish, downside break bearish. But you really, to open the door to a much deeper correction, need to take out those recent lows. So that's it. IWM hit resistance yesterday, and that's also, shown in the chart today. IWM's been trading negative today with QQQ up positive. Why? Well, IWM hit resistance yesterday. Had a nice reversal off the lows, but it ran into its resistance, and so now QQQ is not too far from it. So I'll just say this, going back to the NQs, very little meat left on the bone near term. I would not be adding to longs here. In fact, if you went long yesterday, you can either tighten stops up at this point, let it ride, or just book profits. Again, if you're an active trader, I mean, that's the thing in these videos. You have to listen to what I'm saying. I'll talk about active trader opportunities swing trader opportunities. Investor, you can't be all things. I'll wear different hats. Sometimes I'm swinging positions or trend trading or holding on as investments. Other times I'm in and out. Get a percent or two and move on to the next trade or just stand aside. Regarding the indexes or whatever it is I'm trading. That's it. Those are your levels. Little triangle pattern, resistance there. And remember, if IWM does break the trend line, and especially if it breaks recent lows, and you'll see something similar, that was a pretty big level. That was a previous reaction high. So this whole thing is a breakout. And it's a breakout that occurred with overbought conditions right here and negative divergence. And so far, since we broke this little small bearish rising wedge, we're in a downtrend, very near-term downtrend. Remember, longer term or intermediate term uptrend, near-term downtrend. We're making a series of lower lows and lower highs. And if IWM breaks much below that 159 level, what it means is this whole breakout was a failed breakout, aka bull trap, and that could send us down quite a ways. Until that happens, until and unless that happens, a breakout's a breakout, and as I like to say, support is support unless broken. So that's bullish unless it fails. So there was your objective long entry if you're a small cap buyer on the back test to that level there. But again, that was yesterday's. Whether you're a long-term swing trader going for weeks or months here, or you're an active trader, yesterday's opportunity pull back to those key support levels. Remember, it wasn't just price support as I'm boxing in here. It was also uptrend line support as well in IWM. So all the better when you have not just one but two support levels to go long at or expect to bounce off of. RTY, small cap futures. I believe yesterday I highlighted this was the downtrend line to watch, and boom, look at that. Look at the rejection. Let's zoom in a little tighter there. Remember, we had divergent high right here. This high was divergent high, negative divergence. So negative divergence started to steepen right there. Negative divergence started to steepen up to that point, and since then we set up a downtrend line, and you can see we hit it yesterday, and that capped that nice rally off the lows, and so far it's capped all advances. So I showed you the one on the 60-minute chart of IWM, but this is the one to watch here as well. So break above there. Now keep in mind, if IWM popped this today, let's say by the time you listen to this video, and then NQ and QQQ, which have a little bit more upside to their comparable downtrend lines, you could see NQ start to run on a breakout, and then QQQ hit that level, and all of a sudden the sell programs come in on QQQ and NQ. NQ reverses, large caps drop, and that would then cause a breakdown. So what I'm trying to say, I'm not trying to give wishy-washy analysis. I'm saying take a breakout above this downtrend line with a little bit of a grain of salt until and unless you see the NASDAQ 100 clearly also break above resistance. Okay, well, we'll wrap it up here. I'm not going to go over all 5 things. I did that yesterday, but big levels to watch. Here's an uptrend line on Apple. So there's an uptrend line. That's what I call a minor uptrend line. I scroll back here and I look at a more significant, we'll call it, at least on this time frame, a primary uptrend line. If it was I might have a different one on a weekly chart and even more significant, but there it is. So I'm going to zoom back in. And here are the levels to watch on Apple. And remember, Apple being the top component of the NASDAQ 100 and the S&P 500 is going to, have a big impact. So here's something for bulls and bears alike. Bulls, here's your buying opportunities. Buy pullbacks to the trend line. It works until it doesn't work, kind of a yogiism, if you will. But that's it. So bulls can continue to buy pullbacks there, whereas bears want to see a breakdown of that trend line. Now, if you do break the trend line, remember Apple, unlike most of the FANG stocks, did not backfill the gap. It successfully bounced off or held the top of the gap. So if the trend line breaks, to be safe, you just have to say, hey, there's a big gap below. Maybe it wants to backfill the gap, so you might get a whipsaw. So this would be your safe bet for you bears, shorts, or bulls that are long and you want to know where to I want to ride this trend, continue riding it up. I went long at the divergent low, or after the breakout of the bullish falling wedge back here. in this part. Where do I put my stops? I think there's a very objective level just below that gap right there. And again, bears or bulls, just levels I'm pointing out, has been a pattern here. We back tested the trend line and we were rejected. So it's been resistance before, might be resistance again. We're still below that stock split, buying climax in Apple, potential buying climax. Time will tell. For true buying, it was at least a near-term buying climax. You can't argue that. I mean, the stock fell from there after everybody got giddy on the split. The stock dropped 25%. I mean, again, biggest drop in Apple in many, many months. So hard to argue it was at least a very near-term buying climax. $1 million question will prove to be a longer-term buying climax. And again, right now, I'm really kind of nearsighted on the market with elections coming up and everything else. But if you're taking the longer-term view and you like Apple, again, I just gave you levels that I believe are objective levels to either add to Apple, reduce exposure, book profits, take some profits, short if you want, and use stops. Okay, guys, I'll wrap it up here. Apple trend indicator, by the way, still bullish above the 0 line. Remember, when the white line, the 9 EMA, is below, the trend is bearish, and when it's above, the trend is bullish. Pretty simple stuff, but pretty effective. And again, there's other things too. Look at trend lines and price action and all that. But I just wanted to point out. So really hard to make a case right now to be short. But we're getting close to some resistance levels that you could make a case again when QQQ, if and when we get there. If you want to throw on a short trade with a stop somewhat above for a pullback trade, that may work. Just keep in mind, it would be based on those, going back to that NQ chart, it would be probably the smallest bounces, especially in a intermediate term uptrend. This 2.4% bounce off the lows on NDX would be one of the smaller bounces coming off that drop down to the 27-ish level there. So remember, that one was probably 7% there. This one right here was probably 10% or more, and so far this one's only been 2.4. But there we are at resistance. Okay, I'm going to shut up now and get the video out to you guys. This has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.